February 31st, we're going to talk over my strategy start to end. So again, premium discount, we're marking these levels because we were trending upwards with higher lows and higher highs, and then price turns around, and this is the highest point before it turns around, and then it starts coming down here and making lower lows and lower highs. And so then we anchor price to the bottom here at the lowest price, and then this gives us our range of premium and discount. And then we're looking to go short in a premium. Think about it as stretching a rubber band from the middle of this line, equilibrium. If you stretch price up, it's going to want to retrace back to the equilibrium. And then if you do the other way, if you price comes down below that 50% mark, price is going to want to stretch back to equilibrium. So think about it as there's a rubber band anchored to equilibrium here, and any way you go, it's going to want to eventually turn around and come back to the middle. So with that being said, we're looking for liquidity sweeps above highs to be taken, and then we'd be interested in going short on those. So I am looking at this high right here. This is 1, 2, 3 candles that makes a swing high, and then I'm looking at this high right here, and that's 1, 2, 3 candles that makes a swing high. Obviously there are other swing highs way up here and up here, but I'm not anticipating that they go up that high today, and if it does, then I'll be ready, and I'll be able to draw it out then. So that with that being said, the next thing that we're waiting for on a 1-minute chart is a run into, let's move that back, a run into this liquidity that we marked out on the 1-hour chart. And so what we would expect is for price at open to come up into this area, and then the first thing that we're looking for is a fair value gap down with a shift in market structure. That gives us a bunch of confluences going in the same direction. We're in a premium, so price wants to stretch back into, or you're stretched out into a premium, and so price wants to pull back into equilibrium. And then we are also at that same time taking liquidity. So after the market takes liquidity, it wants to run for the next liquidity. So price comes up here and gives entries to smart money and institutional traders, and then they're expecting that price is going to draw back to the next source of liquidity. So for instance, if price comes up here and we do get an entry, we'd be looking for an exit around this low and inside this fair value gap right here. And so let's just say our entry is around our liquidity point. That would be just about $68 of price movement that we'd be looking for. So obviously price could come up here higher and we could get an entry up here, and then that's more. That's kind of framing how I'm going to plan on getting out of this trade if it does form. So again, we're waiting for price to open at 9:30. At 9:30, that candle can wick into this area right here, and then when it wicks into there or runs above it, then we're looking for a fair value gap down with a shift in market structure. And what that looks like is a fair value gap is made up of 3 candles. So here's an example of one. 1, 2, 3. And so that is our fair value gap. And then a shift in market structure is an internal low in this example being taken. So instead of making higher lows, so right here we have a low, a higher low, a higher low, and a higher low. As soon as we start making lower lows instead of higher lows, that's telling us that price is turning around. So right here, this low is higher than these ones, and price is breaking below it with one of the 3 candles that makes up a fair value gap. That means that our entry would be framed at this fair value gap going short. Now, this is an example. The reason that this isn't valid is because price is not traded above liquidity, right? We have to give as many confluences as possible. If we took every fair value gap here, we'd be stopped out more than half the time. So we have to wait for price to come up above this, and then we're looking for an entry like this. If that does happen, I will make a second video, and if it does not happen, I'll make another video at the end of the day recapping why that didn't happen and what I was waiting for.